this guy, Professor Roy Amara, said it best. It said, look, we tend to overestimate technology in the short term, and we tend to underestimate it in the long term. And I think that's what happened with blockchain and Bitcoin. The other thing that happened can be described with the four main relays. So Satoshi in 2008 created this paper and passed it to the anarchists and said, you go ahead and do something with it. The anarchists were like playing around with it, they weren't really sure what to do, and they decided, forget it. We're going to pass it to the libertarian. We thought, we're going to change government forever. They tried, didn't work too well, and they decided to pass it to the speculators. For a while, speculators were playing with this baton until they said, well, not so much, and they passed it to the institutions. The institutions decided not to pick it up. So in late 2017, 2018, we saw a big drop. And when you ask the financial institutions that have been delayed coming into the space why they haven't, the answer is most likely lack of regulation. But we also had one thing that was totally missing, and that's what's called the Netscape moment, or the AOL moment. A moment that will create a clear use case that would justify this industry, not for the few people who are sitting in this audience, but for hundreds of millions of people. Arguably, Facebook Libra is that moment. For some of us, it is. For some people, especially in third world countries, it is. But for the rest of us, we argue that the Netscape moment is the banks. The one thing that the internet hasn't been able to disrupt just yet. But banking, as we know it today, has a problem. You see, years ago, banks were a good thing. They were all around community banks. When my dad started his business, he walked into his local bank, and people knew my dad by name. The guy who lent my dad money was the guy who also brought his car to be fixed. When my brother was born and my parents needed a loan, they went into the bank knew them by name, and he was there to help them, to serve them, not to rip them off. Over time, however, banks became so big, hence the issue of centralization. And the problem with centralization, the problem that blockchain is supposed to solve, is that you're getting banking systems today that are too intimidating, too greedy, too acting on their best interest and not in our best interest. And let's look at this. I don't know how much you guys make on your interest line in your checking account. How much do you make? Anyone? Come on. I know it's morning. Sir? Maybe what? 1, 2? If you're lucky, interest on your savings account? 10? No, there's no way you make 10%, because if you make 10%, I'm giving you my money right now. In Cambodia. Not so much. Not so much. 10%, just talk to me after the show, I'm going to give it to you. We usually make 1%. Now look what the bank charges when we take a loan or when we take a credit card. 24%. 24% versus 1% of what we pay. Now that's another mind-boggling chart. What you're seeing on the left-hand side, you're seeing a bunch of banks that exist in 1990 to 1995. And the comparable interest that they paid at that time. You had a tremendous number of banks at the beginning of the 1990s who were paying on the average 1.5% interest on your savings. But what happened with all the mergers that took place? In 2009, 15 years after the beginning of all these community banks, the average interest paid on your savings accounts in the United States is 0.12%. We work our butt off, we put the money in the bank. When we need a loan, we get 24%. When we need to get paid on our loans, we get 0.12%. This guy is the CEO of Goldman Sachs. Do you know what he said on the bank's Senate committee? He said the following. He said, my job is to satisfy my shareholders, not my customers. It's all about profit maximization. No wonder that kids today want socialism back. My 12-year-old came back from school one day, he's like, Daddy, I'm going to be a socialist. I'm like, you don't know what this is. She's like, I want a fair world. People today don't believe the world is fair, especially the financial world. Bill Gates said once, the world needs banking, the world does not need a bank. And what we're doing at Celsius, we're building the financial banking of the future, the financial institution of the future, banking for the people. We believe that with blockchain we can create a financial institutions that provide transparency, that give people fair rates, that enable peer-to-peer borrowing, that share profit with the community, not only with shareholders, that does good and does well, and that's our mission at Celsius. We created this app, very easy to use, community-driven, and that pays fair interest rate. With our company, and few other companies that are our competitors, all doing something very similar and something really good for the blockchain community and for the world. You can actually earn close to 10% on your savings account. When you move your coins to us, to many other of the companies that are also doing something similar, you can earn 10% as opposed to 1%. When you borrow from us, you can borrow at 9% interest rather than at 24% interest, right? For us, it's all about transparency. At any given time in our app, unlike those big banks, you'll be able to see what's going on. What's our balance sheet? How much money is being lent? How much money is being deposited? Everything totally transparent. And with us, we share 80% of our revenues with the community. The banks share 90% of their profit with shareholders. We share 80% of our revenues with the community. That's something that's never been done before. So if we want to talk about, the future of banking and where are we going as an industry, I don't know. I can tell you that, when we're trying to predict the future, the best way, Abraham Lincoln used to say, the best way is to create it. And we think about creating the banking on the blockchain. As you can see here, banking will have tremendous opportunity, not only to do better for them, not only to get much better opportunities around KYC, AML, and not only to get much faster remittances, and not only to improve the intrabank transactions. You can do so much that can benefit the bank and the consumers. But when you look at what bankings have done to date when it comes to implement blockchain, and in the United States, almost every single bank is looking into blockchain or their own cryptocurrencies one way or another. Unfortunately, to date, most of those benefits have once again benefited the bank, not necessarily the customer. What I would like to end to say is that if we want to truly change the financial industry in such a way that will benefit not only shareholders, but ourselves, we have to go back to the vision that Satoshi has given us in 2008. We have to build a financial institution that is fair, that is transparent, that benefits the community first and foremost. And for the first time ever, with blockchain, we can remove centralization, we can remove these toll collectors, and build a more fair and more just financial system for all. Thank you very much.
Thank you a lot, dear Daniel. Do we have any questions, please? Wait. I'll wait.
Thank you. Are you a regulated financial institution, and in which jurisdiction?
So we are a money service business with FinCEN in the United States.
Okay.
We've got lending licenses that we've been acquiring in the US to loan fiat in the US. We're in the process of getting e-money license in the EU, and we just applied for money transmit license in the European Union as well. So yes, we believe that regulation will have to play a major role. I just wrote a post that talked about how to really make this, to really bring about that change. We will have to work with regulators and not against them. Otherwise, it's going to be very difficult. So yes, we've been regulated.
And second question, if I may ask you, you have trade finance up there. Are you looking at doing micro or nano syndication, especially in emerging countries, to reduce the cost of financing?
Yeah, so this is not where we've started. To date, we've lent out $3 billion as a company. and we've got $300 million under management, close to 70,000 customers, 11,000 depositors have been deposited with us the last 10 months, $300 million. And we take those $300 million, and that $300 million that people from all over the world have deposited with us, we've paid 80% of our revenues. Close to $4 million have been already paid on a weekly basis to the depositors, right? So for now, again, you have to start somewhere as a company. You know, we're still a small company, and we've decided to start in the Western world. And I think what's interesting about Libra is focusing more on, you know, third world countries and on unbanked. We will get there eventually, but for now we wanted to focus on those areas when we know that there is good crypto adoption and where people don't have the opportunity to earn the interest that we're paying. Good.
What particular crypto assets are you using for these loans, and what do you accept as payment?
So we can lend against Bitcoin, Ether, Ripple, and the top 10 coins. So if you come to me and you say, I need $10,000 loan, I would usually take from you 2 to 2.5x that in crypto.
200% more
Exactly.
capital.
So I'm going to take $20,000 worth of BTC against $10,000 that I'm going to give you. I will keep the $20,000, most of it in cold storage, until you pay the loan back. And we will charge you, depending on the collateral, between 7% to 9% interest. You can pay that interest on a monthly basis, right? You can pay that interest on a monthly basis, and when the loan was paid, you get your crypto back.
Tim Scheffman from Mavericks. My question is, what is the adoption of your wallet in terms of user numbers and also volumes?
So to date, we've got 75,000 people who've downloaded the wallet. All of that has come organically. And 11,000 out of the 75,000 have deposited with us. These are the exact numbers. And what's nice, and what we're trying to do here to change, you don't have to trust me. You can open the wallet, and if you press on the community button, you'll see all the data. How many people depositing, what's the average deposit, how much interest we're paying back to the community. And what's nice, and the reason we got so much adoption, we pay interest on a weekly basis. Every Monday at 12 o'clock Eastern, you're going to get your interest payment right into your app. And with us, what's really nice is you can withdraw the fund anytime. You're not locked. You can put $20,000 today, and a week later say to me, I need the money, and you can withdraw it with no questions. So there's no lockout period. And that's thanks to our risk management that we do. This is not to say that if you give me 10 million tomorrow, and we would want to withdraw all of it, I will be able to give it to you. We will need some notice for that. But for the majority of retail users, they can deposit and withdraw anytime with no questions. Okay?
Thanks.
Any other questions?
Yes. Excuse me.
Just a very quick question. How do you deal with the default issue?
The default?
Default, like the people borrow money from your platform, but they never pay back.
So what's interesting is that we've been doing it for 10 months, right? I don't have more data for 10 months. We had no default whatsoever, not even one. But what's also nice is that because I've got your crypto as a collateral, if you don't make an interest payment, we call you and we say, what's your name? What's your name?
My name, Jack.
Jack. And we say,
Yeah.
Jack, you owe us $50 for interest payment. And if you cannot pay, we will take $50 worth of collateral and treat that as the interest payment. Okay. Right? So remember, because I have 200% collateral against that loan, if you don't pay, I'm protected. Right? That's the whole. So when people ask me sometimes, they say, oh, you know, do you check our credit? No, I don't check credit. I don't care if you have a good credit or bad credit. As long as I have collateral against that loan, both sides are covered.
Okay. Thank you.
Any other questions? Thank you very much.